to today's morning report analysis videos on Monday the 16th of April with me, Rich Perry, market analyst at Hantec Markets. We've got interesting moves on markets actually today. There was a significant lack of safe haven flow actually coming this morning. That despite over the weekend we saw the political or the geopolitical situation escalating around Syria, following on from those airstrikes from the US, UK and France. But it's interesting that the markets haven't taken that as a cue to sell or a cue to a flight into safe haven assets. It seems as though that the markets seem to sort of see this as being fairly well contained. And possibly a one-off. You can see gold, which is marginally lower. You can see the yen, which is only slightly strengthening, but that comes up against the fact that sterling and euro are much stronger against the dollar, and also the Aussie dollar up. I mean, the Aussie dollar is a high-risk commodity currency and outperforming the US dollar today. So there is a lack of real move on these safe haven plays. You can see that Treasury yields are higher. 10-year and the 2-year up at multi-year highs again. So yeah, that comes this morning alongside the VIX, which is again falling back. So this is quite a surprise, I suppose you could argue, although maybe not, considering how it had sort of been flagged to a certain extent, I suppose. But the fact is that if it is one and done, then the markets will take that as probably a bit of a sort of reassuring signal. So we have this move on equity markets today, whereby we're slightly higher. You've got S&P 500 futures over 0.5% higher now. So Wall Street's set to open positively. And yeah, we're looking fairly reasonably set up now as this European session develops. In terms of data points today, we've got US retail sales at 130 being the key factor, 0.2% plus 0.2% on the month. Ex-autos is expected. New York Fed is also at 130, 18.6, down from 22.5, so a bit of a sort of tick lower on that. And yeah, the big focus will be on the retail sales though this afternoon. Now, what we have as our chart of the day is the Euro Kiwi. Now, I looked at Euro Kiwi on Friday, saw this market was breaking down below that support at 67.25. Had that negative close on Thursday and then continued to the downside on Friday, but then it sort of rallied into the close and it's actually continued higher. Now, I think that this could be an interesting move, because what we have seen, if I zoom out here, is this Euro Kiwi breaking all these uptrends. You've got that uptrend dating back to August, had been broken, and also the uptrend, which is now a 14-month uptrend dating back to February last year, also being broken. Now, what we have seen is a recovery today, but is it a recovery that will sort of now signal a sustained move to the upside? I'm not sure, because I look at these momentum indicators. Look at the RSI broke down below 40, below the low 40s, which had been so consistently finding lows in January, February, and March. Now it was consistently below 40 in April. Obviously, we have had a recovery overnight and into today's session, and that's helped that RSI to unwind. But is this now a sort of a little bear move, sort of bear market rally that just unwinds and helps to renew downside potential? Look at these momentum indicators on the MACD lines as well, and the stochastics. They are sort of more negatively configured now. So it needs to be that the Euro Kiwi has to break back above that 69.02 mark. Sorry, 69.10. That was that lower reaction high. Now, unless it breaks back above that, I think you could see that this is a market that's starting to sort of find resistance, possibly where it had been previously finding support. So that would be a concern of mine. So it needs to break above 69.10 to really sort of suggest that this is a sustainable recovery within what has to be said, a medium-term range play, but breaking to the downside last week of that range play, I think would suggest that there is pressure growing to the downside. Now, the reaction that we've got today is positive, but if that starts to run out of steam underneath that 69.010 mark, 69.10 mark, then I think that could be possibly another selling opportunity. We have seen this little recovery in the outlook today, but again, is this sort of enough to break back above that key reaction high that we saw on a near-term basis at 69.10? That would be the technical level that you'd need to see the market going through to drive an improvement on a sustainable basis. So with that in mind, I wish you good luck in your trading, and I'll speak to you later.